What was the last time that we spoke?
That's a good question. I think you came on to our Good Soil Investment channel. It was probably almost a year ago, probably a little bit less than that, I'd guess, maybe 9 months or something like that. But definitely been too long, I think, since you and I have connected.
I see that you are. How many viewers do you have on the Good Soil podcast? How do you call it?
Yes, I don't know exactly. We call it a YouTube channel. So we sometimes call it a podcast. I think most of our viewers are through YouTube. We have a little over 5,000 subscribers and just kind of slowly growing. And most of our, like, we do a weekly chat about the markets and Tesla and everything going on. And we usually get 2,000 to 3,000 people that watch those, and a few more on. We put it on other podcasts like Apple Podcasts and Spotify, and we also live stream it actually on Twitter Spaces. So I don't know, we probably get an extra 500 or so through all those different avenues. You
Nice.
guys are just starting this out, right?
So
is this your second podcast, or are you?
Well, we did a Dutch podcast, and I was the guy who got interviewed. I wasn't the host, so this is my first time as a host. Yeah, so that's going to be new for me.
I'm sure you'll do well.
And we did a Dutch podcast. We had about 7 episodes, and now we're going to start with the international podcast. So it's also because we started going international. We started going into Europe. So we're now into Belgium, Denmark, and Germany, and we want to start in France this year as well. So we have to actually build an international brand instead of only a Dutch brand. So that's why we're actually changing our main language from Dutch to English.
Oh, are you? Okay. Yeah, I mean, It seems like a good idea. The time seems kind of right to be expanding like this. So I'm very curious to hear more details about what you guys have been up to.
Yeah, exactly. So where do we start? I thought maybe the first question I had is just being far into the future and hearing from you what your vision is if a robotaxi is actually a fact. How does the world look like?
Yeah, I mean, I think it's one of those developments that I think is going to surprise the world. I mean, nobody is really thinking about it or planning for this future, aside from really you guys and a few other, maybe diehards who are thinking through the logical implications of what robotaxi really means. So like ARK Invest does some good work on this also. But the thing that I think is most exciting from a societal level is that it's an economy expanding technology. So you are lowering the cost of transportation while at the same time freeing up more time for people to put back into useful applications. So you could be doing work instead of, doing your daily commute, or you can just be, relaxing and enjoying, some content or listening to, information on YouTube. So when you really run the numbers and kind of look at the implications of how you can lower the cost of transportation and provide extra time back to millions and eventually, tens and hundreds of millions of riders, it's a really great thing just for expanding GDP. And then, of course, within, kind of the early adopters or folks who are going to be striving to, really provide this service like you guys are doing, building out a fleet, there's huge economic potential. So, I look at the kind of financial return potential, and it's a huge wealth creation event in addition to being a good thing for society. So, I think it's one of those rare disruptions, I think, where, it's good for society, it's good for investors, it's good for the planet too, on top of that, because, it'll be with electric vehicles, so it'll be low carbon impact. So it's really just like a triple win as far as I can tell.
And you also have like a picture in your head how it will look like on the streets? Do you have like a clear vision in colors, or is it only
like
from
in terms of
economical?
Well, do you mean in terms of like the vehicle form factor changing over time, or just maybe more specifically, what are you asking?
how do you think the platform, the robotaxi platform, the technology, actually, the self-driving technology will change the way we live, and how will it affect our daily life? So,
Oh yeah.
are you looking forward to it for yourself? You told me that you have 5 children, and you live in
6
Michigan.
now, actually. I've had one more.
6? Wow.
Yeah.
Okay. Are you stopping now, or is this just the beginning?
We are definitely stopping, at least for the time being. My wife and I are we have our hands absolutely full at the moment, so we're going to take at least 3 years off and maybe reevaluate the situation. But we definitely have to slow it down.
Yep. So for a family of 7, how do you? What's the benefit of a self-driving platform?
Yeah, so I mean, I look at it. We're my oldest is 10 right now, but probably by the time this technology is commercialized, she'll be, I don't know, 12 or 13, and she'll be kind of right at that age where she's got all these activities she needs to go to. Like she's starting guitar lessons this fall, and she's got like this dance class that she goes to in a like a choir that she's joined, and she does these plays. And then all my other kids are kind of just getting into that age range as well, where they're starting to do activities. So when I'm looking as a parent, I remember when I was a kid, actually, just what a crazy shuffle it was all the time to get to soccer practice and to get to all the different activities that I had to do as a kid, and it was a lot of time that my parents would have had to spend to do that. And so I'm not going to like send my kids in an Uber and just trust that the Uber driver is necessarily like a safe and good person. And plus that's just very expensive to do. So from a personal standpoint, I look at the potential of robotaxis and I think, okay, I could very safely and comfortably send my kids to all the different activities that they have to do and not worry about it. And, in fact, I could check, okay, where are they on my phone? And I can see exactly where they are without having to worry about it or just trust. So to me, that's, a very encouraging, just change to our personal lifestyle. Instead of having to drive around all the time and family gets split up because we're spending so much time in the car getting people where they need to go. Instead, we'll have more time together as a family to kind of connect and be together. So that's definitely encouraging. And then, from a society standpoint as well, I think about land use and just how much prime kind of downtown real estate is being taken up with parking lots and parking spaces, and I think that could be better utilized as cafes or whatever. And so then maybe you have more parking lots on the outside of city centers where robotaxis are charging and parking for extended periods of time when they're not in use. But then they've got enough range to go and do all the daily chores and get all the commuters in and out of the city without taking up the space in the downtown areas and kind of leaving cars there for 8 hours while people are at work. So I think that vision may take a longer time to play out, but I do think there's pretty interesting land use implications as well, which would be, I think, also be a net positive for society.
Yeah, actually, the key word is trust. I've had a workshop 2 weeks ago about behavioral design, and we brought in the case of the robotaxi. And the first thing they said was, you should change the name robotaxi, because are you going to trust your children to a robot? And I think there's a lot of mistrust still about having a robot or having a software drive you. That's one of my questions as well. How do you see this vision that you just talked about? How do you see where we are right now until we are at that vision? What's going to happen in the years in between?
Yeah, so I think where we are right now is there's a huge amount of skepticism that we're anywhere near that vision. So you look at a lot of the mainstream media coverage of autonomy or Tesla's efforts on full self-driving, and they're highly skeptical. And the funny thing actually is they talk about the safety risk of autonomous drivers or of autonomous vehicles, and how it's like this crazy reckless pilot program that's going on the streets of US cities right now. But if you actually look at the safety statistics of it, which you can do pretty easily, it's already, at least right now with where we are today, with the combination of a driver oversight plus the autonomous driving, it's drastically safer than just regular humans driving on the roads. And in fact, like Andrej Karpathy just this week, who leads Tesla's AI program, their autopilot program, he said that his autopilot or his full self-driving Tesla actually prevented an accident, which he didn't foresee coming. And so like this is happening all the time. Warren Redlick, who's another kind of prominent Tesla YouTuber, had the very same thing. I think it was 2 weeks ago. So the safety benefits are actually tangible today, but I think the public perception is actually the opposite of that. So I think what's going to happen, if I had to guess, is the rate of improvement is really accelerating right now. I'm one of the full self-driving beta testers myself here in the United States, and so I'm kind of seeing how each software update improves over time. And I've been really shocked at how good the last update in particular has been. But just thinking back and where it was 6 months ago from where it was today, it's a huge improvement. It's probably 90% of the issues that I saw with it are gone. And so then you can kind of extrapolate going forward and say, okay, well, maybe 6 months from now, another 90% of the issues are gone. And the overall driving experience of what that would look like is just drastically better than, probably the current driving experience. So I think public perception is going to lag reality for a while, but I would imagine at some point, maybe it's a year from now, maybe it's 2 years from now, but I don't think it'll be much longer than that. Where it will just be plainly obvious to anyone who wants to look that the capability is phenomenal, essentially. So as long as the rate of improvement continues to kind of hum along, then it's just a long enough time frame to get to the point where it's going to be inescapable to look at the facts around it. So there may be a lag even after that, from when maybe like more than half the population kind of recognizes how big of a deal this is. Because I think even right now there's a lack of understanding around electric vehicles in general, at least in the United States. I wonder if it's different where you are in Europe, but I would say like probably half of the people in the United States think EVs are a good idea, and the other half probably just haven't even thought about it yet. So I kind of suspect it'll be a similar sort of time lag with autonomy as well.
Yeah, it's interesting that you're saying that you also turn around, because what I've learned from Twitter and following you as a FSD beta tester, especially that you were skeptical as well a few months ago, because you were trying it and you're saying, it's not really doing what I wanted it to do. But you and also other people I'm following and who are actually driving it are really getting very enthusiastic. As of the last 120 days.
Yeah. I mean,
true?
I think everybody's experience seems to be a little bit different, depending on where you are and what kind of routes you're driving on a daily basis. But my experience when I first got the beta program was awful, to be honest with you. I mean, it was it increased the overall stress level of driving, because it would do so many kind of erratic things, and it would turning left onto a busy road was always like, it would always make the wrong decisions. And I was like, okay, I understand why people think this is dangerous when it, is trying to turn when it shouldn't turn, and is, not turning when it should turn. So, there were just a lot of things like that were hard to kind of wrap my head around of, okay, how are they actually going to improve this over time? But yeah, the update I got, it was probably, I think it was in April, I got an update, and it seemed to change, like I was saying earlier, about 90% of those headaches are just gone now. So one of the other issues I had was stop signs were just kind of insufferably slow. It would go to a stop sign and stop, and it would creep about, just way too slowly through the entire intersection. So it's just incredibly unnatural, and I ended up intervening a lot to just kind of override the behavior. So I'm just astonished at how quickly it has improved just with that one software update. There's another software update which I don't have yet on my vehicles, but just came out this past week, which a lot of beta testers are saying is another kind of drastic leapfrog from where it had been before that. So, I mean, you kind of keep compounding huge step changes on top of each other every couple months, and it's very reasonable, I think, to assume that the technology is going to be, as safe, much safer than a human, even without oversight by the end of this year, like Elon has said, and that it could be capable of full autonomy, serving as a robotaxi by this time next year. People scoff at that when he makes these predictions, but I think they're really close now. They seemingly didn't make a lot of progress the last 2-3 years, but right now the progress is really accelerating.
Yeah, I actually learned that it's even there's a race now how many battery you can use in order to have no interventions. So
Yeah.
If maybe the battery is running out of power before you have your first intervention.
Yeah.
What's your score on that?
So probably not nearly that high. I mean, my most of my drives are not too long, to be honest with you. Like the majority of my kind of daily commuting is dropping kids off at places like I was talking about, or going to the grocery store. So I'm probably doing 5-mile trips, 10-mile trips, something like that on average. And I would say the majority of the time now I'm not having an intervention. So that's definitely an improvement. I mean, the same types of trips, just to give you an idea of the improvement I've seen on a typical 5-mile trip, I might have 10 or 15 interventions in the past because it was just so bad. So you keep basically constantly overriding the software and needing to correct things that it was doing. And now the majority of time I'm not doing any interventions, but maybe half the drives I need to do one intervention or something like that. So really significant improvement, but certainly not anything I've seen where I could do a full battery use and not have an intervention. Unless I'm on highways, probably, but that's not really the hard part of FSD right now.
Yeah. Well, I really have to come over to the US to start learning and experiencing FSD beta. It's unbelievable. I haven't experienced it yet, so I'm very curious.
I would love to give you a ride if you could ever make the trip out here to Michigan. But I am also curious from your perspective. I mean, you're obviously trying to build out a robotaxi fleet and accelerate FSD adoption within your existing fleet of cars which are up for lease right now. How are you thinking through both the technological issues that I just laid out, but also kind of the regulatory delay in that functionality shipping to Europe, and how do you upsell your customers right now on FSD when it's restricted relative to what I can experience here in the US?
Yeah, that's something definitely I want to discuss with you as well. I'm obviously very interested in you as a FSD beta driver, but I'm even more interested in having a discussion with you about the business model around FSD and robotaxi, and also discussing our business model and picking your brain to see what we can improve in order to improve our value proposition, but also how we can improve our business model in order to have more people get access to this beautiful technology. That's one of the main reasons I wanted to have this call with you. We haven't talked for about 6 months, 8 months, I believe, and nothing happened on the Tesla front, on the technology side, on the FSD. But we as a company are actually focusing on getting as much uptake and upgrade ratio of FSD for every car that we sell. So I believe 8 months ago our average was about 25 to 30% of every car that we sold had an FSD software package. And
is that of new leases or is that of your total fleet?
Um, yeah, so we have a fleet of about 4,000 cars, and about 1,500 of them have FSD.
Okay. So yeah, 25% of the fleet.
Yeah. But for every new car that we sell, about 20% uptake ratio.
Wow.
And last month we had an uptake ratio of 55%. So it suddenly spiked. I have no idea why, but it was amazing. Yeah.
55%?
Yeah.
And did you change the pricing or marketing or anything like that?
No, so we're still trying to figure out why it happened. And we're also actively doing a lot of stuff in order to test how people react on FSD and why people are actually buying FSD and why they are not buying FSD. We're trying to find out what's the difference between the people and what kind of persona they are. So I was also very interested in your survey that you made about the quote of Elon, that he said, well, I think that at the end of the year, we will have 1 million FSD users, FSD beta users.
Yeah.
And you made a whole Twitter thread about it. So
yeah,
I was wondering if you think the uptake and upgrade ratio will actually drastically improve in the next 6 to 8 months. And if so, why do you think that's going to happen?
I mean, I do. I struggle because I don't want to. I do a lot of financial modeling for Tesla, so I try to get very accurate earnings per share estimates, and I will always trying to check my own bullishness. And just one maybe anecdote or story about where I've been wrong about this in the past is that probably in, I think it was 2019, 2020, I was assuming an increase in take rate. For all the reasons that you and I are talking about. The functionality is improving. People are going to realize that it's better. And I was actually dead wrong. So they had a take rate of about 25%. And what you saw instead is that the take rate really slid downward. They don't disclose it, but by my estimates, it's somewhere around 15%. Other people think it's around 10%. So take rate drastically lowered. Now part of that's just because of sales mix. So sales in China, for example, they've said has a take rate of around 1 or 2%. So it's just not a popular offering there. But in my mind, that has nowhere to go but up. Like if the take rate in China goes to 0, it's not going to move the needle whatsoever from 1%. But if the take rate goes to 5% or 10%, then that could have a meaningful impact on the overall global take rate. But I do think the time is kind of right for this functionality to be more desirable for consumers and for people to really start to have a higher take rate. And so I think one of the value propositions, and you're thinking about the demographics and who likes this stuff, I think one is like the early adopters, so people who just want the latest and greatest technology. I mean, I think I kind of fall in that category. I really wanted FSD, one, because I'm interested in it, but just to be able to track the technology and how it improves over time, I just find that fascinating. So there's probably a very small, percentage of the overall customer base that, would buy it for that reason. But that is some percentage of people. And I think with the rate of improvement now and the functionality that it can do, at least in the United States and recently Canada has been added as well. I think the fact that you can actually get that functionality on a car delivered today, as opposed to just kind of waiting for a year and hoping it's delivered, that's probably going to increase take rate to some small degree. But then I think another factor is you're going to have a group of people who maybe they don't think robotaxis are a reality, and maybe they're not kind of technological early adopters, but they like the idea of full self-driving as like a luxury feature. And so when I'm using FSD on the highways, and I'm sure you can experience this as well in Europe, it's a drastically better experience to just have autopilot on the highway and for it to handle your, keeping in your lane and keeping the distance. That's just it relieves stress. It relieves your anxiety. It makes, I did a very long road trip last year, and I couldn't believe just how much better the experience was of having autopilot in that situation. And I think we've just recently turned the corner where the same thing is true now for driving on city streets, where I can just, double tap my stock and it turns on, and I'm all of a sudden I'm not as worried about navigating or missing my turn, and I can kind of free up a little bit more mental headspace to focus on other things. And that's a form of luxury. So I think in cars, luxury used to be, you have a fine leather and you have, premium materials and a quiet interior, like all the things that, Mercedes and BMW were kind of known for. But I think the next generation of kind of luxury consumers really value things like technology that improves the overall driving experience. So I think that becoming a reality is going to open up the attractiveness of full self-driving to some other people. So those are two reasons I think that take rate will increase. And then the other reason is just that Tesla's actually guided that take rate is going to increase. This is one of the things that I don't know how the analysts all missed this on the Q1 earnings call that Tesla had about a month and a half ago. But they actually had a note in their investor presentation saying they expect software-related sales to make up a bigger percentage of margin going forward, than just kind of hardware margins. And that's even though they expect hardware margins to continue to improve with all the improvements in the gigafactories and castings and 4680 cells and all those things that they're doing to continue to drive down costs. So I think Zach Kirkhorn, their CFO, is a relatively conservative guy, and so for him to kind of approve investor communications that they expect more software margins going forward, to me is a clear indication that they have some data internally that leads them to believe that take rate will be higher. And I've got a couple theories around that, but that's kind of my high level thinking around it.
Okay, we will talk about that as well, hopefully one time. But I wanted to ask you to tell something about yourself, about good soil investment and your background as a valuation analyst. And maybe we can try to talk a little bit about the business model of FSD, and maybe even the attractiveness for entrepreneurs to start going into this arena. So
yeah, sure.
Maybe you can introduce yourself. Why you're so interested in Tesla?
Sure. So I have a bit of a finance background. I have a degree in finance, also a degree in Chinese, but that's not particularly helpful. So I started my career in financial valuation in New York City, did some investment banking after that, and then moved into the energy space. I was overseeing wind farms. Got really interested in Tesla in 2019 in particular, thought there was the market was just wildly wrong about Tesla. So I went very aggressively into some investing around Tesla, and that allowed me to leave my job. And so I left my job about a year ago, a little over a year ago, and then joined up with Emmett Peppers, who founded Good Soil Investment Management. And so Good Soil, just a very quick overview, it's a hedge fund where we try to make use of kind of aggressive, highly risky investment strategies. A lot of which is kind of oriented around call options and derivatives and put options and things like that. Trying to take advantage of what we think is a really disruptive time in kind of economic and technological history. So that's a little bit about our fund, and then we also give we have a unique structure where we give half of our fees after profits or after expenses to charities. So we want to be really successful, make a lot of money for our investors, but we also have a charitable goal where we don't want to accumulate wealth solely for the goal or objective of getting more wealth. We want to also kind of lift up others in society who've been less fortunate than ourselves.
Thank you. I want to talk to you about the business model of FSD. What's your vision on the pricing? Do you think that the pricing will accelerate, and how much will it accelerate if you think it's going to accelerate?
Yeah, so they've kind of steadily increased pricing. I would say even while functionality has not improved too much. I think we're at the point now though where functionality is starting to get really good. where there's some percentage of the population who would the pricing in the U.S. right now is $12,000 U.S. And so there's some portion of the population who will who would spend $12,000 just for a highly capable ADAS system or advanced driver assistance system. So people who just want the functionality and maybe are not bullish on autonomy. But I think if the functionality continues to improve at the rate Elon is kind of claiming that it will, then I think you're going to get to a point maybe later this year where it becomes clear that, all right, the robotaxis are in fact a kind of possibility. So you'll move from pricing it as a driver assistance feature to pricing it for kind of an economic, value creator, a cash flow generating potential option, which is not something that's ever been done in the history of vehicles. But I think if they get to that point, maybe $20,000 US would be a reasonable point if it kind of becomes clear that robotaxis are kind of right on the cusp. But then I think when it's to the point where there's actual robotaxis generating cash flow on the ground, I would think at that point people can do the math much more simply, and I think the kind of financial analysis of what is the internal rate of return or the net present value of a robotaxi, people are going to start doing that math. And I think if you believe markets are efficient, Tesla's going to essentially have to price full self-driving at such a point that it kind of where the robotaxi operators can generate, say, a 10 to 15% internal rate of return while still paying for all their expenses and paying a hefty premium for full self-driving as well as the car itself. So I've attempted to do that on a couple different times, and you can get wildly different answers depending on your assumptions. So I'm like, I've seen some aggressive assumptions that say you could charge $50,000 for full self-driving. I think that's maybe on the high side. I think 30,000 is not outside the realm of possibility. But when I'm trying not to be too aggressive or too conservative, I kind of land somewhere around $25,000 at that point in time. But ultimately, I think the economics of what can be realized by robotaxis are what's going to drive that. But I'm curious your thoughts as well. Do you have a price in mind, or I know you guys are looking at these economics very closely.
Yeah, we definitely have the vision about that, and that's. I think you actually called it. We have our business model is like a call option on FSD and a call option on robotaxi. So we are a leasing company right now. We have about 4,000 Teslas in our fleet, and about 1,500 are already equipped with FSD. And we lease them out for around €700 a month for 20,000 kilometers a year. So rough calculation, it's about 40 cents per kilometer that we lease them out. And then you have to have a contract for 5 years. But if we get the same car actually driving 60,000 kilometers instead of 20,000, the cost of the kilometer will drop to 20 cents per kilometer.
Yeah.
So the price would halve just by driving more. So if you believe that a lower price will actually bring more electric cars to the market, then this is the solution. And why shouldn't a car be able to drive 60,000 kilometers a year? It's just a matter of having enough people in that car while the car is on the street. So at this moment, the cars only use 5% of the day. So it's a totally crazy investment, actually.
The utilization is terrible right now.
Exactly.
If you look at it,
utilization rate is extremely low for a very expensive item in your household. I mean, it's the second most expensive item next to your house.
Right.
But there are also there's also a lot of friction for the model in order to rent out your car while you're not renting it or driving it yourself. So that's the reason why we're still in this in this market and in this reality. So that's why we are very excited for this software to really become better, and the software will eventually enable the utilization rate to go up. So
and if you don't mind, I'm curious.
Sure.
Also, with the size of your fleet, and you've been doing this for many years now, do you have any kind of data on the useful life, or the how many miles or kilometers you're seeing out of these vehicles? Because Elon spoke in the past about a 1,000,000-mile life,
Yeah.
but there's obviously degradation along the way. So I'm curious what you're thinking about the longevity, or how many kilometers can you get out of even your existing fleet?
Well, longevity is not a problem at all. I think the most people are anxious about the longevity of the battery, but the battery is actually better than the car itself. So the battery will last at least 600,000-700,000 kilometers. So no worries. And so we're not worried about the longevity. We have other bottlenecks in our business model, and that's what I wanted to discuss with you. And I'm trying to pick your brain about that, because that's something I'm really excited to talk to you about it. And that's actually the whole idea that a car actually depreciates when getting older. And the whole new idea of Elon as of 2019 is that he's saying that Tesla is not going to depreciate in value, but it's actually going to appreciate in value. And in the market we are in right now, we're actually seeing it happen.
Right.
So, I think we're entering a market the next 3 to 5 years where supply is going to be lower than demand. So, we're actually entering a valley of death, where the ICE car is actually gonna die, and the EVs, the demand for EVs is gonna rise dramatically. That supply is not able to even catch up to the demand. So we will see that even on the hardware part of the car, we will probably see an appreciation instead of a depreciation, just due to market demands. That's one. And then second, if the software gets better, and it's accelerating as we have seen the last 90 to 120 days, and if that will accelerate, then the price of the software will increase as well. So if the prices of the software will increase, then the car will appreciate as well. And that's one of the questions I had for you as well. What do you think of the residual value of the FSD package? So here in Europe, you can buy it for like 8,000 euros. In the US, it's about 12,500, I believe. But
I think it's just 12,000, but yeah, it's
or 12,000,
right yeah.
But what is the residual value on an FSD package?
Yeah,
do you have any idea or a vision about that?
To me, it kind of comes back to what I was saying earlier about are you valuing it as a driver assistance, like a convenience package, or are you valuing it as an autonomy package? So, I think most people a year ago were saying, well, it's a driver assistance package, it'll never be autonomy, and it's not even a good driver assistance package, especially when autopilot works fine on the highways and the city street driving isn't even available yet, and I think it's going to be terrible when it does come out. So like the residual value for somebody thinking about it like that might be, I don't know, $2,000 or something like that. So I think that's why you saw such low take rate a year ago. But now I think you're getting to the point where people are saying, oh, that's actually really cool functionality. I've seen all these YouTube videos of people posting what it actually does in zero intervention drives, and it's getting better. I'd like to have that on my own vehicle. And so I think you're at the point now where you can justify a $12,000 or 8,000 euro, maybe not in the euros, because I think in Europe you're probably still at a point similar to where we were in the United States a year ago, where it just wasn't available. But at least in the United States here, I do think take rate is going to increase because more and more people can watch these videos and actually believe that the functionality is good and that they see the rate of improvement. And then, to your point, if you actually have a financial hat on, like you and I like to do, where we're looking at the business opportunity, it's a call option on autonomy, like you were saying. So you can do a valuation of it and maybe come to what I was thinking is a reasonable fair value of say $25,000 just as an economic valuation mechanism. But then you have to ascribe some probability to that, right? Because it's not 100% probable that autonomy will happen, and even if it does, you can't start generating those cash flows today because robotaxis aren't available yet. So maybe you give it a haircut of, say, I don't know, 25% or somewhere in that neighborhood. So that would say that, okay, FSD at $12,000 is overpriced if you're only going to kind of calculate an expected value of buying it for robotaxis. But I think when you couple it with the things you were saying about the residual value being higher on electric vehicles in general, I think the overall economic package starts to look a lot more interesting. And you say, okay, these are actually appreciating assets, not depreciating. And if you can lock in, FSD price at maybe half the rate it'll be a year from now, well, then you're creating even more economic value. So I think it's hard to look at FSD at this point in time without also looking at the economics of the vehicle itself. And your business model is the perfect way to, I think, do that, where you can kind of continue to generate income and cash flow from the vehicle in this interim period we're in right now, while preserving this super attractive upside optionality that you guys have.
Yeah, that's why I wanted to ask you and pitch your brain. I'm actually going to pitch you an idea, and I wanted to know what your thinking is. So as we come to the conclusion that actually the market is not the bottleneck anymore. So the demand is actually outstripping supply. So the bottleneck is not anymore, are we going to sell lease contracts? But actually, the bottleneck for us is actually how are we going to finance the cars? And I'm saying cars, but because all the financiers, they still look at it as if they are financing a car.
Right.
But I'm trying to convince them that it's not a car. We're actually in the mobility market and we're in the car leasing market, but we are not selling a car.
Right.
We are offering them a robotic solution. Which is mainly a software solution. It's not a hardware solution. So at this moment, because we are financed the traditional way, we are financed by banks, and we're financed through our cash flow from our leasing contracts. We have to have a residual value in our books, and the residual value has to be the same or almost the same as a residual value of a normal car or an ICE car.
Yeah, I wanted to ask you about this too. I'm very curious, but yeah, keep going.
Yeah, so because we have this financier who is actually demanding from us that we have a residual value in our books of an ICE car, we have to offer it to our clients as if it's an ICE car. So as if it's a depreciating asset. So if we lease it out to our client for about 700 euros a month, which is 40 cents a kilometer, about half of that cost, half of the 700 euros is depreciation. And about 100 euros or 150 euros is interest. So you see that about 60% of our total lease payments is depreciation and interest. So I'm trying to think of this case to look at it from a different perspective. So if you try to look at it as if it's an appreciating asset, and your client also believes in that. So your client is actually leasing your car and he believes that it's an appreciating asset. The only thing we have to change is how we're going to finance the car. So my idea is to actually set up kind of a robo investment fund or a robo taxi investment fund, or I don't know how we're going to call it, but I think your Emmett called it a REIT, R-E-I-T. Robo,
yeah, he was kind of used. There's the real estate investment trust is a kind of popular format for holding real estate assets. But yeah, we've been thinking a lot about this and saying, there should be a similar investment vehicle for investing in autonomous, like robo taxis to start, but then the Tesla bot down the road and other kind of autonomous. So a robot investment trust was I think the phrase that Emmett came up with for that.
So it's almost the same acronyms, but it's a different beast we're talking about. Yeah. So my idea was maybe the community who already believes in this story, the community who is actually driving FSD beta and actually seeing that the car is going to appreciate because it's almost like a robot actually is able to earn you some money down the road. Maybe they are able to become our financiers instead of the backward-looking financiers that we have right now. So you actually want to have like forward-looking financiers instead of backward-looking financiers.
Yeah.
So I'm still trying to puzzle that out. So I'm still trying to see if it's possible to actually lower the lease cost to like 300 euros, having this appreciating asset and having our clients be our crowd financiers. That's actually the idea. But and that they will become like kind of equity partners in the whole project.
So I think you cut out for a second there. So you said I missed the part that you said before they would become equity partners.
What did I say?
You were talking about, I think, getting people, so lowering the cost to about 300 euros, I think. And so essentially you're getting rid of the depreciation. You probably you're either going to leave in the interest expense, I would imagine, or give these financiers some share in the upside if and when you're able to realize that, right?
Exactly. Yeah. And in that way, you're actually lowering the lease costs, and in that way, you're actually taking away a lot of friction for people to start driving with FSD and just start driving. And the whole idea is that the lease contract will be mandatory with FSD. So there's no option anymore that you can choose for FSD, yes or no. So it's and you're financing it yourself.
Yeah. So I like that. I've got a couple questions. One would be,
please.
Are you, so to me that makes sense. If you can get more supply from Tesla. So for example, Tesla's not lowering prices right now because they've got way more demand than they can actually satisfy with their supply. So if you were to lower your lease pricing to, say 300 euros or 400 euros, would you actually be able to get enough vehicles from Tesla to meet that surge in demand that I would think you would see at that price point?
Yeah, that's a very good question. But that's something that, that we have no idea. And nobody has.
Right.
So because nobody knows how big the supply is going to be in relation to the demand. But I think we definitely what we are already doing is that we are pre-ordering Teslas. So what we normally did is that we only ordered a car when we got a contract, when we sold a contract. So we only ordered the car when we already had a lease contract. But at this moment, we are pre-ordering cars. So we are just predicting what we're gonna sell, and then we're already ordering it. So that's a way for us to actually lower the delivery time for our customers.
Yeah, no, that makes sense. And are you still seeing a backlog where you've got more lease interest right now than your supply coming in?
No, we are not in the same luxury position as Tesla is.
Okay. So, I mean, that would be something, I think your 300 euro price figure, to me, that would be a floor, and you would probably want to just keep lowering that, as your, as you are able to, I guess. So you wouldn't want to lower the price if you had way more interest at that price point than you could fulfill. but to me that does kind of make sense. In terms of structuring the kind of robot investment trust, or however it would be, I think there would be interest. I think that the interesting thing though for to maybe consider is the alternatives that some of the diehards would have. So I think if I'm standing as a kind of neutral investor and saying, okay, I believe Tesla is going to solve autonomy and I want that, upside optionality, was it a better investment to own the stock, or is it a better investment to hold an investment in the robot investment trust? So there's probably a couple different ways that you could structure that. I mean, there's the concept of preferred equity, where maybe you go after the not diehards, but you could maybe give some upside potential. Where preferred equity is kind of like an instrument that's in between debt and equity, right? Because you're guaranteeing some rate of return, but it's probably at a lower rate than you'd be getting from your lease financiers. So that'd be, one potential option to consider. And then they could maybe convert it if, to get some higher upside potential. So that would lower your cost of financing while giving a little carrot for the upside potential. There may be one pool of people who are interested in that. And then there may be another pool of people who would say, yeah, I'll take zero interest. So you can essentially lower the cost all the way down to that, call it €300 floor that you're talking about. But I want a significant piece of the robotaxi pie, if and when that is realized. So then it becomes a question of how much is that risk reward like, and there's maybe a couple things to unpack there, but I could see it being structured in a couple different ways. But I do think it would be really interesting to some people. And it's something Emmett and I have been talking about for a while, that somebody should be doing this.
Yeah, and it's actually something that we also talked about, is that it's I was kind of wondering why there aren't any examples yet of companies doing this already. Because it's for us, it feels so obvious that it's going to happen, and it's what you're saying. It's also around the corner. So why aren't we seeing companies actually doing this? Well, maybe we are seeing it with the Hertz deal, and there's also another company, Autonomous. What's their name again in the US? But what's your take on that? Why aren't we seeing more companies doing this?
The Hertz thing blows my mind, because they're not even buying full self-driving.
No,
it's like, I'm like, guys, come on, you got such a huge opportunity here, but they're just doing it. I think the calculation that Hertz is doing is kind of what you were saying earlier, just that the residual value calculation is wrong. So if they say you've got
they have the same problem. They have the same kind of financiers.
Well, exactly. Exactly. Yeah. And so they're probably finding it hard to justify adding full self-driving. And then maybe, particularly with a renting model, there's maybe a risk that people are not familiar with the software. And so there's maybe a higher likelihood for an accident, especially in this kind of early stage of the full self-driving being in a beta.
Yeah.
So that could be a reason that they're not buying the full self-driving. But I think your business model is the perfect vehicle for this type of financing arrangement. So I don't know why more people aren't doing it. I think maybe one of the reasons is because you kind of need some cash flows in this interim stage that we're in, when robotaxis aren't real yet, to kind of make the business model work. And there's probably just not very many companies like MisterGreen out there which can support the cash flows in the near term, but also add this upside optionality. There should be more companies doing it, but I don't know why there's not.
Yeah, it blows my mind as well. And that's actually what we're trying to pursue with this podcast as well, is that we are actually hoping that more people are getting aware of this opportunity, and that we can together solve this problem and become more entrepreneurial around this vision that we are seeing in front of us. And I think I talked with you about it, but as well that I think that Elon is also thinking about this. He just wants to give this platform for robotaxi operators to set up their own business around this new technology.
Yeah, I mean, I think he mentioned, the idea of an Uber driver right now. An Uber driver today is selling their time, and they're stuck in one vehicle, and they're kind of capped based on the economics of, selling rides at $2 per mile. Well, in the future, that same Uber driver can finance a fleet of, say, 20 vehicles, and manage the fleet, and that's probably a more rewarding job than, physically driving everywhere. And now some people like the conversation. That's great. You can do that too. But I think the economic opportunity that this would unlock for small entrepreneurs is really quite staggering. But the financiers are definitely so backward looking that that there's that could be something that hampers adoption. So I do think you need more kind of risk appetite in the capital structure to fund this. Yeah, and I'm kind of curious too. Just what are you seeing with vehicles that are coming off of your lease? And so you've got them. Presumably, you have a residual value on your books, which is much lower than the actual market value of those vehicles. So how are you, as a company, kind of handling that? And I would imagine that's something of a financing mechanism, right? If you can get more cash flow out of these vehicles than you have in the books for them, well, then you can either sell that vehicle at a profit to finance more vehicles or release it. At a higher rate, and so maybe you must be, I would imagine, seeing higher cash flows than your banks are or your financiers were predicting you would see out of this business. Is that right?
Yeah. The thing is that every car that we get back from our first lease period, we put them in the second lease period.
Mm-hmm.
So we don't want to sell the car. So.
Right. But you still have a bottle. So that's, sorry to cut you off, but so you're getting more economic use out of these, but the bank still won't give you credit. So your business has a bottleneck of financing. Is that still is that an accurate statement?
Well, no, it's not that we have a bottleneck of financing, but I'm just thinking in terms of growth. So. With the current financing option and with €700 as a value proposition to our customers, I think we're able to grow with 2,000 contracts a year. I think we will make that this year. And
wow.
Next year we will grow with 4,000 contracts. So we are actually growing pretty fast.
Like 50% plus a year, right? That's
that's
phenomenal.
It's phenomenal, and I think it's going to be at an exponential rate in the next 3 to 5 years. So the demand is not a problem, but what I'm thinking is, if we can even get our value proposition even better, we can grow maybe even times 10.
Yeah.
So I'm just looking at how are we able to actually grow faster, and at this moment, all the benefits of this upside is actually coming to the shareholders of MisterGreen, but we want to share that upside with our community, because what are we going to do with the upside? I can think of a lot of things, but I would rather have more cars on the road than having a more profitable leasing contract, if you understand what I mean.
Yeah, you've got a mission, which is essentially Tesla's mission verbatim, right? You want to accelerate the transition. Of course, you want to do well by yourself, but that's not the only mission. The real mission is to get more cars on the road, right?
Exactly, yeah, and help the mission of Tesla, and I don't think they need help. I think they're doing just fine, and we are a very small bucket in that whole big container ship which is going. It's gonna change the world. But I'm just trying to think of inspiring ourselves and also rethinking our own business model in order to inspire other entrepreneurs as well. In order to start start seeing this great opportunity of self-driving technology. I mean, we're not even thinking about all the services that you can actually put on top of that self-driving technology. And what kind of entrepreneurial thoughts you can have about that. So, and
I mean, I love to run financial models. So I think there's it would be pretty simple to pull together a model of what the opportunity looks like and kind of what the potential returns could look like for expanding this business model, and look at it from the perspective of a lessee. So how much could you reasonably lower the cost by, and then how does that flow through to MisterGreen and to these this robot investment trust investor? I think it wouldn't be a huge amount of work to kind of pull that together, and then you can look at reasonable return profiles and what does that look like, because I don't know why other people aren't looking at this, but if they're not going to, then heck I'll do it. Like, so
let's do it together.
I'd absolutely love to. So maybe we can follow up on some more kind of detailed specifics, because there's absolutely an opportunity here, and I can't necessarily figure out the optimal structure just in my head as we're talking about, but the opportunity is just too big to ignore. Maybe I don't end up investing or our fund. We've actually thought about, Emmett and I have thought about starting a separate fund to do something like this. So that's something that we could potentially consider as well. But at a minimum, I think running the math and saying, okay, here's the extreme upside scenario, here's like a base case scenario, and here's a downside scenario where, okay, what do the economics look like if, let's just say, Elon's wrong and robotaxis never work and you just are selling leases. I think you can run some reasonable sensitivities and see what the returns look like in each of those scenarios. And I think you can what you want to do with any financing or capital structure, right, is to properly allocate risk and reward. So what you're seeing right now is you've got financiers who are only interested in risk, and so you've got like this focus on residual value, which in my mind is like the least of all concerns. And you want to pivot towards people who have a higher risk appetite and want to accelerate the mission like you do. And also be open to some of the reward that entails. And so if your financiers aren't doing that for you, I think that the right thing to do is absolutely to kind of shift your focus. And I'd be happy to kind of help where I can in that.
Yeah, and I think it's a very interesting investment opportunity for people as well. I mean, it's if you believe in it.
Yeah.
So, and I was also you were talking about it. What was it? You said it's the people have to make the decision whether they should invest in the Tesla stock, or they should invest in a company or in an asset which appreciates, or in your own. For example, the Uber driver you mentioned. Mm-hmm. He could invest his money into a Tesla stock, or he could invest his money together with his community into 20 assets, mm-hmm. which will return him money. So what do you think? Is it more, what's the risk reward of the Uber driver? Should he do it? Should he put his money into the Tesla stock or in his 20 assets? And
well, I think there's more risk if you're the Uber driver, because you've got to run that business, right? So there's maybe some people who just want to be passive investors, and so they would their decision, I think, would be invest in Tesla stock or invest in this robot investment trust, and then there's probably going to be other kind of more entrepreneurial types who maybe don't have a huge amount of capital to invest, but would love to run the business. And so then they're going to need the investors in the robot investment trust, and they're going to go and run the business and clean the cars and do all the dirty work, which, I think actually sounds kind of great. I wouldn't mind doing that myself, honestly. But I think there's room for all different types here. I think there's room for passive investors who make the decision, robot investment trust or Tesla, or maybe some allocation of both. And then I think there's room for people who want to get their hands dirty a little bit and start their own robotaxi business.
Exactly. That's what I believe as well, and that's what I'm trying to figure out still. If it's also the idea of Tesla themselves, if it's their idea to just create a platform where people will actually are able to plug in and support the mission. And I mean, we have been doing that for 10 years, and we are very happy with it. And it has been a very rewarding model as well, also for our shareholders, for our stakeholders, for everybody. And it's one of the 10 years have flown past. It has been a lot of fun as well, and I've learned a lot personally. And so it's. I think it's already there, but I don't think if everybody's already seeing the opportunity of the platform Tesla is actually offering.
Yeah, I don't think they are. I mean, if they were, I mean, for one, Tesla stock would be a lot higher. But also, I think you wouldn't see a lot of this skepticism and I mean, frankly, there's a lot of attack articles and things like that in the United States, and politicians who want to kick full self-driving off the roads and just think Tesla's being totally reckless. There's much more skepticism that this is a possibility, let alone an inevitability, than there is, I think, support for this idea. So I don't know how to change people's minds on that, but what I do know is that creates opportunities where if we are right and we're kind of early adopters, one, we get to kind of push the mission forward, like you were saying, and that's a good thing because it's good for society. But two, we can potentially have some outsized rewards because we're seeing a future that the market does not see and is not pricing appropriately, frankly. So I think it creates opportunity. It's hard day to day. As an investor in Tesla right now, it's down like 50% from all-time highs. So that's not fun to stomach, but at the same time, I've got a huge level of comfort with where we are because the execution level on the things that matter is actually way better than people are giving them credit for. And you're seeing that with the strong residual values that you've got on your books. Like the product is just better than people realize. And so that kind of gives me some optimism.
Yeah. Are there any questions you have about our model, Matt? You're eager to ask me some questions, so
I really want to pick your brain and let me know if you have time constraints. But
sure. No.
I so want to dig into this. What you were just saying about I was saying a while ago now about your take rate changing. So, I mean, I posted a thread. I don't know, was that 2 years ago now, about how you try to push full self-driving more aggressively. I would say essentially by subsidizing it, right, for your leaseholders. You offered them, pricing which was a lot more attractive, than just doing a Tesla's full self-driving subscription or just amortizing the cost of full self-driving over a 5-year life of the vehicle. You were certainly subsidizing it. Can you maybe just give a little bit more background around how your pricing has changed over time, and then also how your take rate has changed over time?
Well, we started about 2.5, 3 years ago, experimenting how we are able to sell FSD. And at that moment, we thought it was way too expensive and didn't have any value. Right. Until I think about 2 years ago, we started some clients asking to put it into the lease, and we were like reluctant. Why should we take that risk? And then it actually started before that, because it was the Tesla AI Day in 2019, I believe. There where Elon actually explained the whole idea of FSD and the business model around the robotaxi. So that was the first time we started thinking about it. And so we had a very low take rate because we didn't have any idea or weren't actually focusing on it. We're actually focusing on selling lease contracts. But then we really realized that we as a leasing company were actually maybe out of business in a few years. because a leasing company is actually leasing out cars to people who are actually driving the cars themselves. So if a car actually becomes a robotaxi, then we are out of business.
Ah, I see.
So
Okay, so if you're really taking that opportunity seriously, then you're a middleman who's going to get cut out.
yeah. So when we realized that, and we actually put a rest in peace sign behind our logo, MisterGreen.
Oh no!
We realized, okay, maybe we have to disrupt ourselves, and maybe we have to disrupt our own business model, because it's eventually, if this software is going to really take place and be as good as Elon is promising, then our business model is at stake.
Yeah.
So then we started. Okay, so how are we gonna actually convince people to take FSD while FSD is still in the alpha version in Europe? It's not even in beta version. It's like beta minus. So we started using it first ourselves, and then we started taking trips with it. We started taking trips to the mountains. It's like a 1,000 kilometer ride. And we actually learned it was actually pretty good on the highways. It was actually, when we went to the mountains, we actually came to the mountains completely relaxed.
Yeah.
And we weren't that stressed anymore, and we weren't that tired. We actually went on skiing at the same day that we arrived. So,
wow.
It also took us some time and some acknowledgement that the software is actually changing the whole way that we are looking at driving and actually looking at mobility. So we just started doing all kinds of experiments, and then we thought maybe we should do an experiment where we actually offer the FSD at a very low price, at €0. We just give it away, but we are able to higher our price when the functionality is actually improving.
Mm-hmm.
So and we started explaining that on our blogs and on our website and in our sales calls, and we started explaining it to our prospects. And they actually and we started explaining what we experience ourselves during the trips, and then people started realizing, hey, it's actually it's a pretty good deal.
Yeah,
I can get it at €0, and maybe I have to pay in the future when the functionality is actually getting better, and then I will be very happy to pay more.
Right.
So that really gave us a boost. It gave us such a boost that we actually had to raise prices again, because otherwise we would have too much risk. We started putting it into our configurator. So we said, you can choose FSD, and you can choose which price you want to take it. You can take it either for €80 a month in a 5-term year lease, or you can take it for €30, and then we're able to higher the price when functionality is actually getting better. Mm-hmm. So we started, I think, at 10% uptake, and now we are at 35% uptake ratio a month. And actually, last month it was 55%. And for every car that is coming back to us, we actually put them back into the lease with FSD. So our upgrade percentage is about 70-80%. So that's pretty high, of course, and that's the way for us. Because our clients are our clients for 5 years with us. So we started to offer them FSD driving school.
Oh, really?
So people are able to come to our Teslas and drive FSD. And there's somebody next to him actually explaining how you should drive it, how you have to tap, how you have to react to the screen. So you have to look at the screen and not through the window in order to drive the car, and how the AI is actually working together with your manual inputs, your feet and your hands. So people are actually getting a training in how to use the AI and how AI is actually helping them to drive safer.
Yeah. So thinking about your business model a little bit, if I'm doing my mental math right, you're essentially covering the full self-driving cost over the kind of 2 lease terms right now, right? So you get full payback after 2 lease terms of your at your say €80 pricing.
Can you ask that once more?
So you're charging for the package where you don't raise rates. It's €80 a month, right?
Mm-hmm.
So that
True.
would mean you're taking a loss on your full self-driving, because you have to pay for full self-driving up front. For MisterGreen has to pay that. So you're taking a loss on the first lease term, but then as you roll that into a second lease term, then you are actually recovering your upfront investment, right? But and then you're also have this upside optionality that we're talking about with robotaxis. Is that, am I doing that math right?
Well, it depends on what you're actually putting into the books in residual value. So at this moment we have to put in a residual value which is the same as the residual value I was just talking about prior in this this meeting. That is about after 5 years we have to take a residual value, and we have to take that residual value for software as well. So at this moment we have a residual value for software which is the same as the hardware, which is totally arbitrary.
Yeah, that doesn't make any sense at all. So
no, I mean, not at all.
Then by your accounting, I would imagine you're probably showing a loss on your income statement for all these FSD upgrades that you have, but you actually have this residual value which is mispriced. So, but if you can roll that into a second lease, like you were saying, then by the time that lease is over, then you've fully recovered your cost of the full self-driving upgrade. But you also have this flexibility to become the mobility company of the future, right? Because you've got this fleet of FSD enabled cars, and so you can start offering rides at a much higher cash flow generation rate than your current leases. So to me, that's like your pricing makes sense, is kind of the math that I was just checking out. And so the fact that you're seeing
the price point of €80, we're not making a loss on the first lease period. We're actually just break even somewhere.
Oh, okay.
But on the €35, we're making a loss. So we are actually making a bet that it's going to be better in the future.
Yeah, no, that makes sense. Okay. So then, I mean, how long had you been at that uptake rate of around 35% before you saw this huge uptake in April to 55? I mean, that's an astonishing number. I want to drill into that. I know you said you don't know exactly why it happened, but I mean, has there been a slight uptake leading into that, or did it just come out of the blue?
No, actually, the 35% I'm talking about is like an average. So we have some months that it's only 15.
Okay.
And then suddenly we have some months with 50, 60%, and then suddenly it's 10 again. So it's on average, it's 35.
Oh, okay. So it may just have more to do with the sample rate than, or the sample size of your new leases than necessarily just a trend that you could extrapolate going forward.
It's not a trend yet, and we also here in the Netherlands we have kind of seasonality. So the end of the year we actually sell a lot of lease contracts compared to the beginning of the year. So I think the uptake ratio in the beginning of the year is actually higher than the uptake ratio at the end of the year, because people are focused on getting the car instead of thinking of FSD.
Interesting.
It's due to fiscal reasons.
And is there a clear split between the €30 price point and the €80 price point, or have those switched over time?
No, it's not able to switch. Oh, you mean the uptake ratio per?
So between those two, is there a difference in trend?
No, not really. And it's also evenly split. So it totally depends on the willingness of the buyer of taking the risk, yes or no. So there's not there's no clear evidence why Uh, no, there is no trend available.
It's very interesting, but I mean the uptake ratio does seem high. I mean, compared to what people sort of think Tesla is seeing. Now, granted, you're offering it at a lower price point than Tesla is, but it's not so crazy low relative to, say, the subscription price that they're offering right now, which is probably analogous to your lease price add-on. So, I mean, do you have any thoughts on what Tesla is seeing, or how transferable kind of your knowledge would be to Tesla's uptake ratio? Because especially the fact that you're in Europe seems surprising, because the functionality is so clearly limited. I would expect your uptake ratio to be lower than the US, even if the pricing is maybe a little bit better.
Yeah, I had the exact same question for you, but then the other way around. Why is uptake ratio still so low if we're seeing 35%? So I don't get it. For me, it's strange as well.
I'm wondering if it might be increasing, and they're not disclosing a lot of information around this, to be honest with you.
Exactly. I think maybe the information that we're looking at is not really correct. I mean, I know my information, but the other information that you're talking about, I think it's from the internet. I have no idea where it's from. It's from.
Yeah, I know Troy Teslake, who does a lot of great research. He's published some FSD take rate assumptions based on surveys, and I forget his exact number, but he's estimating it's like around 10% or something like that. To me, that has seemed low. I've been estimating 15% in recent quarters. But the thing that's really unclear is you have the huge existing fleet of Teslas, which were sold, let's say, 2 years ago when FSD was terrible. How many of those existing vehicles are opting to upgrade now, either via subscription or just buying the package outright? Tesla's not given us any information on that. I mean, you can kind of do some financial engineering to look at the way their deferred revenue balance is increasing, for example, and try to hone in on some expectations. But you're really kind of grasping at breadcrumbs. And so I do think it's possible that they have seen an increase in take rate. And especially with their backlog. I mean, if they are seeing an increase in take rate right now, it's not going to show up in their financials until 6 months from now. And so that gives me another reason to believe that, the guidance they gave in that Q1 letter of saying, software sales are going to be bigger. Maybe they're just seeing that in their order flow, but it's not flowing through into, margin and revenue yet.
Yeah, interesting.
But like you, I don't get it. I'm not sure.
No. Yeah, it's something there's no data about. So the only data we have is our own data, and the only increase we saw was last month, but we have no idea why. So it could be that next month it's 10 again. So there's no real trend visible at this moment.
Yeah.
And there's also not a lot of things changing in the market. The only thing which is changing is that we're putting more emphasis on it as a company. That we are we are actually putting a lot of effort in order to educate people about the possibilities you already have with FSD Alpha, and already with FSD Alpha, it's already a good deal to drive for 30 euros a month. I mean, already with FSD Alpha, I have a lot of benefits from it.
Yeah.
And I'm more relaxed, and I can actually look at my phone, which is not really legal, but it's the last time I stepped into an ICE vehicle because I was on vacation, I was really looking forward to double tap and really get them in FSD, and it wasn't possible anymore, and I really got frustrated. So,
yeah, I know what you mean.
It's if you experience it, you don't want to go without it. And if somebody is actually pulling it away from you, you're actually saying, well, don't pull it away. I will pay you 50 euros a month, no worries, or 100 euros a month. Yeah. Because you're so accustomed to it. It's another way of driving. and it's so much more relaxing and so much more comforting, and also safer.
Yeah, absolutely. It's I definitely would not give it up right now. I mean, I've become so accustomed to using it, and I mean, 6 months ago it was definitely just for the kind of interest of watching how the technology changed, but the experience was bad, like I was saying. But now, I don't know if I had to put a price on it, what it would cost for me to get rid of full self driving. But for me, I'd probably pay it by $20,000 today just to have this functionality. It's just so good, and I can't imagine kind of going back to the way driving used to be after having experienced this. So I think it's here to stay, and I think the trend is up in the long term, even if in the short term it might bounce around a little bit.
Yeah. You have any more questions, Matt, or are you?
No, I mean, I'd love to pick your brain for a little bit longer. I actually have another
Sure.
meeting I need to run to in 4 minutes here. So I'd love to do another one of these sometime, and maybe we'll get you on our channel too again to maybe give an update on some of the stuff that you're seeing, and talk about your idea of this robot investment trust. I think there's a lot of good stuff here that warrants some further unpacking.
I will try to send you some notes and some presentations and some data, and then we can discuss that. And then maybe you're able to look into our financial model. Maybe we can make some forecasts as well, and look at the financing side of it. And of course, I'm very happy to elaborate on that data. And do it next
that sounds
call.
good. I'd love to take a look at that and maybe get back to you with some questions. And I think a follow-up would be great.
Okay, Matt. Thank you very much. It was a very entertaining again to talk to you, and see you on the next podcast.
Yeah, great talking to you, Florian, and keep up all the good work. I love what Mr. Green is doing. I really wish more people knew who you guys were and what you're doing, because you're such a unique company, and I love following your progress over time. So keep up the good work.
Thank you.
Thanks,
Bye-bye.
Florian.
Could you please leave your device open until the session has been uploaded to the server of Riverside, Matt?
I will definitely do that. So it says I'm at 99% right now, so I think the recording is still going on, so I think you probably need to stop the recording, and then it'll probably get to 100 pretty quickly. But I'm going to step away.